All right, let's talk about one of the most underrated ways to build wealth: compounding in money market funds. Most people overlook this simple strategy, but it's a game changer if you want to see your savings quietly multiply over time. Yeah, I know, money market funds aren't flashy. They're not the next big crypto, and you're not going to double your money overnight. In fact, they might seem downright boring compared to the wild swings of the stock market or the hype of new tech investments. But here's the thing. I'm all about results, and nothing quietly grows your wealth like compounding. It's the slow and steady approach that actually wins the race, even if it doesn't make headlines. So what's a money market fund? Let's break it down in simple terms. It's basically a super low-risk investment where your money goes into safe, short-term debt. Think government bonds and big-time banknotes. These are the kinds of investments that banks and big institutions trust with their own cash. They don't swing up and down like stocks, but they pay you something called yield. That's your reward for letting the fund use your money, and it's usually paid out regularly. And here's where the magic happens: compounding. This is the secret sauce that turns small, steady gains into serious wealth over time. Let's break it down. Imagine you put $1,000 into a money market fund that pays 5% a year. That's a pretty reasonable rate for a safe investment. That's $50 in interest after the first year. Not bad. It might not seem like much at first, but it's a solid start, especially when you consider the low risk. But here's where people mess up. They take out the $50 and spend it. Maybe it goes toward a few coffees or a night out, and just like that, the power of compounding is lost. Instead, if you leave it in, next year you're earning 5% on $1,050. That's $52.50. Your money is now making money for you, and you didn't have to do a thing. It's just a few bucks more, but over time, it snowballs. Each year, your interest earns more interest, and the effect gets bigger and bigger. Say you keep reinvesting, never touching your gains. You're patient, and you let the process work for you. After 10 years, you'd have over $1,628. That's without adding a single extra dollar, just letting your original investment and the interest grow together. That's 60% more, just by letting compounding do the work. No risky bets, no sleepless nights watching the market. Now imagine you're not just putting in $1,000, but adding a bit every month. Suddenly, your money is working for you, day and night, without lifting a finger. Even small, regular contributions can make a huge difference over the years. Here's why this matters for young investors. The earlier you start, the more time your money has to grow, and the bigger your results will be. Too many people want to get rich quick and ignore boring, steady growth. They chase trends, hoping for instant results, but often end up disappointed or even losing money. But the numbers don't lie. History shows that consistent, compounding growth beats risky bets in the long run. Compounding is like planting a tiny tree that turns into a money forest. It starts small, but with time and patience, it becomes something truly impressive. The earlier you start, the bigger your forest gets. Even if you can only start with a little, it's the habit and the time that matter most. And let's not forget, money market funds are super liquid. That means you're not locking your money away for years. Need cash? You can pull out your money, usually with zero hassle. It's your money, available when you need it, without penalties or long waiting periods. So you get steady growth and flexibility. That's a win-win. You're not sacrificing access for growth, and you're not taking on big risks. So if you're serious about building real wealth, don't sleep on compounding in money market funds. It's not about getting rich overnight, it's about getting rich for sure. Start early, let your money ride, and watch what happens. The results will surprise you, and you'll be glad you started when you did. The future you will thank you. Trust me.